For everyone who starts joining, we wish you already a very warm welcome to our third Investor Circle webinar session. We'll wait for another 2-3 minutes before we kick off. In the meantime, we can present like our speakers and our Investor Circle team. So my name is Sarah Abuagela. I'm board advisor at TheBlock for all topics investor ecosystem and investments. With me today is also David. Welcome, hello. David. He's dialing in from Canada. And yeah, later on, we're going to dive deeper in our fireside chat. Our main scope for today is RWA and tokenization. So we're going to go from a macro into the micro perspective, and excited to kick it off in a bit. So we just stay on the line for another 1-2 minutes, and then we kick it off. Also, just as a heads up as well, you have also the opportunity to raise your question in the very top right. So whenever you have questions at the end of the session and the fireside chat, you are able to place your question on the right side. And wait for another minute, and then we will kick it off. Also, for the ones, if you haven't signed up yet for the Investor Circle, we will also share later on the Investor Circle link. So you're always updated about our future initiatives, what is going on also at the Block ecosystem, and also for our future webinar sessions. So later on, we will share with you also the application form if you're not yet a member of the circle. Yes, I think we can kick it off. So it's been a few minutes. So welcome again, everyone who joined us today for our third Investor Circle session, and for taking the time to dive deeper with us into the world of virtual assets. Each session we have a specific industry scope and sector scope. So today we're gonna dive deeper in what RWA means and tokenization, especially from an investor circle. And we're gonna have also an interactive session with our CIO, David Lucatch, and also an engaging Q&A with you at the end. As I mentioned earlier, if you want to place a question, on the top right-hand side, you see a symbol with a question mark. So later on, we're gonna address all your questions. So feel free to type them in already during the session, and we will get back to you. So to kick it off today, prior to going straight to the investor circle, we actually dig deeper first. What is TheBlock actually doing? So it's a chamber of virtual asset. What is the mission? What is the philosophy? And what role does the investor circle play in it? Then we go straight into the industry insight, where we stand with RWA and tokenization, and wrap it up also with our fireside chat and Q&A. So if it comes to TheBlock itself, TheBlock is headquartered in the UAE, and it's the International Chamber of Virtual Asset. It's private held, and it's like a one-stop shop for all topics related to virtual assets. So we support projects in their full cycle when it comes from inception over licensing, activation, up to visibility, but also if it comes to regulatory frameworks, if it comes to investors interested not only in the Middle East and the emerging market, but overall into virtual asset, we are like the go-to destination as well, and happy to support. Why we are called the Chamber of Virtual Assets is actually because we have different blocks and different programs. So depending on what are your needs as a corporate enterprise, as an institution, government body, as a founder, or as an investor, we are setting up different programs and initiatives. So we really want to create really a one-stop common ground for all different players in the ecosystem. So as you may saw on the blog, we have already onboarded different chains, such as Avalanche, Solana, also multiple great top-tier projects, as well as different enterprises. So we really try to make it a very active and all-around chamber and ecosystem. What is very important to mention is that it's really on application only basis. So we really keep it exclusive. We always do due diligence for everyone who's joining to keep also the ecosystem at a top grade. Another thing which is excited that we will open also soon our physical spaces in Q3. It will be located in One Central. So for the ones who are familiar with the UAE, you know that One Central is also one of the top destinations for crypto and Web3 players in the region. So we have not only the experience center, but we will also have the virtual tower in DWTC, and we are also happy to welcome you once it is opened as well. When it comes to InvestorCircle, which is relevant now for our session, for us, it's really important to have a community and private closed-door initiative. What does it mean? Once you join as an investor, you are not only getting access to a created investor community, which is not only regional, but globally. You also get insights on industry, on latest industry trends, what we're doing right now with the webinars. Also, if it comes to facilitated deal flow and access to top deals, we are also there to support with our own due diligence, our own in-house support. So the webinars is just one of many more initiatives to come from the blog. So as I mentioned, it's a very curated one. We do it really on application and application based only. So we're really happy to welcome you on board as well. Now we riding straight into the topic of RWA and tokenization. These are big buzzwords, but not only buzzwords, it's something that has been fundamentally shaped in the past years. If we talk about real world asset, it's not only traditional physical asset like real estate, art, but it's also financial assets like bonds, private credits, different type of commodities. And the key is actually of real world asset tokenization is transferring and converting ownership rights into digital tokens on a blockchain and make them really tradable. So that's really the key which empowers actually real world asset on a chain. So really tracking them in real life, such as performances, valuation, and like other RWA or like other tokens in general, RWA tokens can be also programmed, can have a lockup period. There can be specific requirements set for investors. And why is it so essential right now? We really see institutional adoption. We're going to tap into it even more later on, but large asset management firms like BlackRock, for instance, have been already tokenizing bonds, and also the benefits of on-chain yields and liquidity opportunities, really democratizing and bringing fractional ownership to masses has been one of the key benefits. And also we saw in the past years a growing and more evolving infrastructure in terms of blockchain solutions as well. So this is the key. And rather than saying, there has been also a lot of evidence. So I'm really excited now on this chart because this is more past view on what happened since 2024 up to June 2025. So as you can see, the market for tokenized RWAs grew over 260%. So it's from 1.8 billion to over 23 billion. So this is really a testament that there has been a strong demand and growth. And the highest one, you see it already here, it's for private credits. Why for private credits? I mean, for those non-bank loans, they became easier to buy in small pieces and to trade them digitally. There has been different platforms like Maple Finance and Centrifuge who are helping in that sector as well. And it really allows investors to earn good returns and still stay in crypto-friendly environments. Second runner-up here, you see also US Treasury debts. What is the reason there? I mean, a big part is that US regulators like SEC, they giving clearer rules for crypto and tokenization, such as the latest example, like the Genius Act, when it comes to stable coins, has been a big monument. So that's something which made it really attractive for big players like BlackRock to really activate those tokenization processes in-house as well. And another part also here to highlight is safe returns. Tokenization also brings a safer place to earn yields, especially in uncertain markets, and to track them easier when they are on chain. But again, we get on this also more deeper later on in our webinar. Another part, as I mentioned, we see a clear growth here, not only the growth on RWAs on chain, especially with private credits, US treasuries. Again, it's a strong signal that institutions are here the key runner on adopting adopting tokenization. And a really great part here, again, coming to a futuristic view, is the growth is even more promising. So even what you can see here, this is now estimated growth chart from Boston Consulting Group. And the market is really expected to grow end of 2025 to 600 billion. And with a conservative projection of 12.5 trillion, or even more optimistic 23.4 trillion US dollars. So it's a really optimistic shift, and again, it's based on what we have seen already in the past in terms of adoption, especially coming from institutions. And here again, you see funds, fixed income, equity, followed by real estate, stable coins. They're really like the top runners in the sector. And there's, if you think about now also of the different areas, we can think about three phases of the expansion here. The first one is assets in the money market funds, as mentioned again with players like BlackRock. The second one is also institutional adoption with private credits, corporate bonds, real estate, and then really having a more stronger integration deeper into illiquid assets like private equity, infrastructure, real asset backed debt. So there's really a kind of phase that we can observe here as well. Overall, what is very important is, of course, regulatory and tech foundations. We're going to dig into this deeper also in the fireside chat. We have currently multiple regulatory frameworks, like in the UAE, which is VARA, and also ADGM. We have in Europe MiCA, which is quite progressing in the European ecosystem. Also, Singapore has been a front runner, and of course, also SEC, who's signaling also a strong adoption with its industry players in the ecosystem. If it comes to the tech standards, of course, running it on chain meets standards. So most common one are ERC 3643, which is permissioned. There's also ERC 1400. So also in the standards itself, it keeps evolving. So this is something which is also great to see in the past years. To make it really secured and audible, of course, we need custody solution, QIC, smart contract audits to really ensure that it's secured. What I want to highlight as a key benefits, again, is the access. Just imagine you're investing into real estate. Instead of investing in a whole building with 500 units, you can fractionalize it and earn by having a part of the ownership of the total asset. So especially in the real estate, there has been already multiple use cases of fractional ownership when it comes to tokenizing real world asset. The same with collectibles, or if it comes to art, or for instance, you're interested in Alzheimer's, having fractional ownership of a high value asset gives more access to broader masses. The good thing is also in terms of liquidity access, you can sell, buy, and trade the tokens 24/7. It doesn't matter where you are, there's no cross border limitation. And it's also transparent since it's on chain. So it's reduced counterpart risk as well. One thing we will talk about, which is still evolving, is of course, if it comes to regulatory frameworks, if it comes to custody and protocols, this is something which still needs to evolve. That's why we're always keen, as what we see a latest development in US with Genius Act or other SEC regulatory frameworks, that this has to keep evolving, also to make sure that the infrastructure is really secured and auditable. So overall, as a key takeaway of this deeper dive into RWA, we already see like a blend of TradFi coming into blockchain and crypto through tokenization. This is a very strong signal. We already have advanced established protocols on the market like Centrifuge, like Ondo Finance, also different use cases of tokenizing asset in terms of real estate, in terms of bonds. So overall, the markets are really gaining traction, and we're still at the beginning of it. That's the beauty of it. It's still very promising. So that's why it's a very hot, not only narrative, but a fundamental shift when it comes to bridging like TradFi and also DeFi in a sense. Another part which is great to watch, there's already live tracking tools that we can recommend. For instance, there's RWA XYZ. It's a live tokenized asset overview platform. So literally, depending on the sector you want to check in, you can have a live tracking. So it's a global tokenized asset overview tool. Also, DeFi Llama has very great options as well to tap into different type of RWA latest developments. So that's something which gives you also a first taste and touch point when it comes to RWA. But yeah, that was all in terms of giving you deep dive and a general overview. Now it would be great to actually get right into it. How is the actual RWA landscape? And David, first of all, I would like to invite you also into the fireside chat, and maybe you can, before we kick off, give also a quick brief from your side as a CIO of TheBlock.
Sure, thank you, Sarah. Well, welcome everyone, and appreciate your attendance today. We are seeing a lot of RWA opportunities, and I think Sarah hit all the highlight points. What makes our RWAs unique is I think access. Access is the key. If you're tokenizing or you're selling something in a particular environment that is not tokenized, a lot of times, whether it's a financial instrument or other items, you're restricted by the locale. You're restricted by the governance in that region. When you tokenize an item and it's on a global exchange, you have the ability to trade, buy, sell, and trade globally. And that really reduces the global barriers to entry. So for those that are looking to sell a real estate project or create an RWA, you're now into a global market rather than a local market. I think that's the real key element. Also, those that are looking to create RWAs, you're going to see the big players come to the table. Treasury bonds, financial instruments, BlackRock, all the popular names will be there. But there is a growing market for what I would call speculative opportunities. And that might be smaller real estate projects, that might be art and collectibles, that might be commodities. A lot of opportunity for people to, participate in programs that they otherwise would not be available to them in their region, or allow for creation of investments around the world. So I think that's it. And I think when Sarah, when you start talking about standards, yes, there's 3643, which is not a trustless product. It is a trust-based product because it does on-chain compliance. Now, you can't really do KYC on chain because PII can't go on chain. It's against GDPR, but you can have an indicator that KYC was done that is connected to the token. So you can verify that KYC was done. Where 1400 is really a protocol that was invented by Polymath, right? And Polymesh is a partner in the block. So they're a sister. So there's lots of things when it comes to RWAs which you need to look at and discuss. And I think the block is well suited for that. Hopefully, Sarah, that was a long introduction for a small question.
No, no, it's perfect. I think, uh, as you said, we can write a deep dive in also when it comes, David, from your perspective, you're also based in Canada right now, but in terms of regulation and key jurisdiction, like the UAE with VARA, like in US with SEC, how do you see the path forward to unifying this framework, especially if it comes to securities and RWAs?
That well, securities are always very difficult because you're dealing with two jurisdictions at any time. You're dealing with the jurisdiction from which you're selling and the jurisdiction from which you're buying, and there is no global alignment yet on that. That is a bit of a challenge. So you're trying to deal with in securities. You're trying to deal with exemptions. What is exempt from registration? What allows someone in a jurisdiction to purchase? I mean, when it gets to become when we start talking about sandboxes, there are lots of sandboxes out there for the creation of RWAs. Many of the sandboxes aren't well utilized, or they're challenging because at the same time you're trying to create a project for an RWA, the regulator is trying to learn what you need, right? So you're sort of putting out all this effort, and the regulator doesn't always have a box to answer. So it's security regulation like the 1933-34 Act in the U.S. is well defined, and there's been a lot of things piled on top. Tokenization is a difficult element for understanding, and that's why it's taken the U.S. so long to get there, because tokenization does not fit into the 33-34 Act. And companies like countries like Canada, and to some extent Australia, UK, a lot of the very friendly countries take their signals from the U.S. They're signaled on what's next from the U.S. So the U.S. with the passing in the Senate still has to go to the House of the Genius Act is a great way forward. So regulators are VARA is getting very deep very quickly into the weeds of what are RWAs. There are still some questions that need to be answered. The ability to sell beyond the existing UAE region. Europe, EEA and EU with MICA and MiFID II, and the combination of regulations around that and the exemptions for private placements is a really great place to do business, because there are frameworks already established that have been tested and have gone to market. That's really important. Have been tested and gone to market. So when you deal with your counsel, because ultimately you're going to deal with a series of professionals, that taking that item into that region, that there are at least frameworks and precedents to be able to create RWAs.
No, it's a very valid point. As you mentioned, I think having clear jurisdiction that pushes also the industries, as we see already, right? Even with the UAE pushing, let's say, the tokenization of real estate. I mean, there has been also a strategy of tokenizing 7% of the total real estate market in the future. So I think, as you mentioned, regulation jurisdiction really built a foundation for all traditional players also to build on. And you mentioned already, and we saw it also in the statistic, many of the largest RWA volumes are in tokenized treasury, private credit. And what do you see in the next 3-5 years, like the top untapped potential when it comes to RWA? And like if we think about the sectors.
Well, again, got to be careful here because beauty is always in the eye of the beholder, right? What do I like versus what everybody else is like? Just have to look over my shoulder and say, wow, collectibles would be a big idea.
Mm.
But collectibles, everything has to be done in a way that is verifiable. So I like commodities. Coming out of Canada, we're looking at the gold, silver industries, the metals industry, because commodities are easily understood on a global basis. Gold is gold is gold is gold, right? It's real estate, while fantastic, has a high localization factor. In real estate, they say the three prominent things you need to look for in real estate is location, location, location. Well, if I'm in Toronto, which I am now, and I'm looking at a property in Kuala Lumpur, Lagos, anywhere that I am not familiar with, how do I assess the viability of that product? But when I look at a commodity, it is the same around the world. It's got a benchmark price. However, commodities have high inherent risk. Will, if they're not mining or they're producing now, how long will it take to get that gold or silver or commodity out of the ground, right? And what will it take to do that heavy lifting? So I think natural resources are a huge opportunity. So, I think things, you've got to always balance your portfolio. You've got to have steady growth items, safe investments, and then many of us are entrepreneurs. You've got to take a little bit of risk. So where's the risk? I think we're going to see a lot of tokenization of things like membership, right? Things like opportunities in commodities, opportunities in unique stocks and technologies. Like, again, very simply, you could tokenize a stock, and within the block, our partners at Tokenized do that. So I could take a stock and tokenize it. We're seeing it anyways. We're seeing the fractionalization of stocks today. Somebody buys a pool of, let's say, Tesla stock, and then they sell fractional pieces of it because someone may not be able to afford a whole share. So they're buying little pieces of it. But that that by doing RWAs in that process, you're globalizing, even though the stock may be traded in one or two markets, you're globalizing the access to that stock. So it is really about democratizing the ability for assets to be held globally where they were once held locally.
No, completely agree. I think, as you mentioned, that's the beauty, as we know, also of decentralization, right? With blockchain technology, that we really have a high accessibility for the broader masses and really getting more access into more financial products and really into investing as well. So definitely one of the most exciting areas where I'm aligned with you as well. And do you see, we know, for instance, till now, we still face some hurdles, right? Especially you mentioned if it comes to tokenized security and the even what falls under the security laws. Where do you see is the biggest compliance and custody hurdles for institutions who really want to issue or hold RWA on chain today?
Well, I think first of all, you've got to have great counsel. You've got to have counsel that
Mm,
understands.
mm,
And the block can all we have a lot of partners we can recommend great counsel that understand
mm,
tokenization, especially RWAs, and that is really an important situation. Your local counsel, while as good as they may not understand the global landscape for securities,
mm,
and
mm,
securities is um, a bit of a challenge because different countries have different regulations. And again, you're back to the plus and minus of having someone to sell to and having someone to sell from. But I think, VARA and Dubai and ADGM, the UAE is a major leader in moving these
mm,
things forward. So I think you're going to see a lot of opportunities come out of the UAE, and I think a lot more out of Europe. I think the US will come on quickly, but there still will be some trial and error to get things out of that region. So, really, I think if you want to look at a friendly jurisdictions, I think Dubai certainly is very friendly and open to opportunities. And I think in conjunction with that, EEA and EU are probably the best to look at because, again, the stability. I'm not discounting Project Guardian or anything in Southeast Asia. I just think that it's also access to capital, right? And the UAE is known to be very friendly to capital opportunities.
Mm. No, very valid point. This is, I think, still having these hurdles made out of the way, I think will drive also mainstream adoption. And do you think right now, do you believe that for on-chain tokenized RWAs, are they competing or do you see them more complementing traditional financial industry instruments? Like when we look at it where we are right now and where it would be in the future, is it more a complementing or a really competing aspect and player?
That's a really good question. I think it's both. Again, when give a perfect example, I'm going to use again. You use the U.S., Canada, you use Europe. I'm going to use Canada. So Canada has 40 million, a population of 40 million. Let's say 10% of that population, or 20% of that population, or 15, whatever number you want to use. I'm going to use 10 to start. Let's say 10% of that population actively trades stocks. Okay, let's say 25% or 30% actually, trades some kind of financial instrument. Could be 50%, doesn't matter. If you can list your product as a tokenized RWA or tokenized security, let's say with Binance. Binance has access to 120 million people, right? So your access on a global basis. Again, I go back to that key word. Why are RWAs gaining popularity? Because of the access to a global population. So you may have the same instrument available or a similar instrument available in country, but a complementary instrument available through an RWA. So let's take a building. You may say, you know what? We're going to take 20% of that building and tokenize it with an RWA, just 20%, to gain larger access to a larger population or larger funds or family offices or whatever the case may be. That is a complementary product, not a competitive product, right? So you can do lots of different things where you can coexist in multiple markets and jurisdictions at the same time.
No, it's super. It's as you said, it can empower our existing system, right? So that's why there will be it's more empowering even more individuals to tap into those sectors and to use financial instruments that they may not have the same access than before. So no, that's a very great aspect you also mentioned. And do you see with the rise of tokenized assets? How important is it for RWA protocols and issuers to balance decentralization and regulatory compliance? And how do you see the tension playing out? You already mentioned we're still facing some hurdles. But yeah, how do you see the balancing? Like which players does it take? Which elements it takes to balance this hurdle out?
So I think there's the yin and yang of this is choice, no choice, right? So on the no choice side, regulations are regulations. You don't have a choice, right? This is the box. How do you create a structure? Because it all comes down to structure. How do you create a structure that fits in the box, right? Because if you're doing it in, let's say, in the EEA or EU, you still may have to file a prospectus, and a prospectus for an RWA. And a prospectus has a set of guidelines. It's not open to interpretation. This is the prospectus. So you have a no choice part of the equation on one side. On the other side, you have lots of choice, and there will be more and more choices because it is an emerging. RWAs are emerging markets. So you will have choices on who do I list with, who do I partner with, who provides liquidity, market making, who are my counsel. So as long as you understand that, and it's same as taking a company public. Really, at the end of the day, I've taken many companies public. It's taking a company to a public listing. if you understand the balance of that and understand the trials and tribulations that you're going to deal with, and again, that's, I think our team at the, at the Investor Circle is really good at this because we understand global jurisdiction and we have the resources and tools around us. So it's not only for our investors, it's for those that want to create RWAs, right? So it's having a team around you that has the knowledge to guide you, or at least say, you know what, as we get to the fork in the road, let's go left or right. As Yogi Berra said, when you get to the fork in the road, take it. That doesn't mean you've got to make a decision. Do you go left or right? So there will be implications of going left, and there will be implications of going right. There is the no choice balance with the choice balance, and that's what really takes.
No, no, super, super, super well. Also the metaphor, because long term, also the most successful RW protocols would be those who can really act as a compliant bridge, right, between the Web3 and the traditional players. And as you said, having it, keeping still the ethos of it, of transparency, auditability. I mean, that's really the core, how we gain also the credibility, right, with RWAs and tokenizing them. No, super good. No, thanks so much. We're also looking at the time, and I think we're already, I guess, David, also for some Q&As. I see already some inputs
Sure.
in our question field. So let's dive right in. Okay, there's a lot of questions around how's the process of tokenizing an asset.
Okay, so let's talk about the process. It really is understanding the product, understanding the jurisdiction and the regulatory framework. And then, so once we understand the product, the regulatory framework, and the jurisdiction that you're in, then it's all about structure. What is the goal that you're trying to achieve, and how will tokenization help you reach that goal? So that really comes down, and we had a call earlier today with one of our partners who wants to do an RWA, and it came down simply to great product, great opportunity, it's in real estate, okay, let's deal with structure. So really what we would do with you is sit down and talk about how your structure works within the framework of your industry, the framework of the regulatory environment and jurisdiction, and then what are your goals and aspirations with that product group. So it really comes down to a structure element, honestly.
No, valid point. And it's so important, as you said, defining the needs of it, right? What is really the outcome and the goal of before creating the tokenization process, and finding really the right partners and executors to support in that process.
And if I might add to that, Sarah, then once you've got that all done, then it comes down to process. How do you execute? I'm sorry, I should have added that. Then it comes down to the execution. But you need those building blocks in place first before you can get down to the execution. And that's where, again, we have partners like Polymesh, we have partners like Avalanche, we have partners, relationships with people like Binance and Bitpanda and various other organizations that will list a token, and then all the other pieces around the table. So once we get the building blocks done, then it comes down to an execution layer, which we can help with.
No, super. I guess that covers very well that question. And the next question would be, how should you assess an RWA? I guess it's more about what makes a tokenized RWA, right? What would be for you the key
Well,
aspects?
it's that is fairly it's I want to say it's fairly simple, but nothing is fairly simple, right? In very layman's terms, would you see that product as a public offering in a traditional jurisdiction? Would it be a financial instrument? Would it be a fund? Would it be something that you would buy that has some financial regulatory guidelines around it? Now, funny enough, commodities don't fit into that. Commodities are not a financial instrument. But if you tokenized the mine versus the gold coming out of the mine, that is then an RWA. So you've got to understand where RWA happens. I mean, there's in the US there's something called the Howey test that says, is this a security? But
Mm.
that while broad, almost everything fits into that. And then in Canada there's something called the Pacific coin test. But if you're buying a product for the purpose of creating profit, or receiving profit, or wealth, that is generally in layperson's term a financial instrument and security. But again, comic books could be labeled as securities. Coins, stamps are not that popular anymore, but Legos. I mean, anything can be art. Anything can be deemed as security, but more traditionally, funds, investment tools, real estate. There are impact projects that can be tokenized, and some funds have a dedicated segment going to impact programs or green programs. There's lots of ways to make your RWA work, but if you're doing something that has, if it would appear on the balance sheet, it's likely an RWA. If it would appear on the income statement or the P&L statement, it's likely a utility. That's probably the fastest way to look at it.
No, 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 that's super well defined. Also, there's a question coming back to the biggest opportunities. We saw, like, based on the statistics and data, RWA is really diversified. What would be, again, maybe for you, the top one sector where you say, okay,
I,
this is your favorite sector for RWA?
it's really hard, but I am going to say I think the biggest opportunity is going to be natural resources, and the production of natural resources, and I'll include within that the energy sector. I think everything around that creates value for human life. I think AI is an amazing sector, but I don't think it's yet an RWA, because unless it's the IP behind it. So I want to say the natural resource sector, and I'm a technologist, so me saying that is almost blasphemous, but I think that, and second would be real estate, only because natural resources, and I go back to this, gold is gold is gold, silver is silver is silver, right? It has a wealth calculation to an individual and to a fund that is equal in value.
That's super good. I think from my personal side, I would say from business-wise, I think financial sector definitely drive in terms of tokenized, yeah, bonds, also private credit. And from the personal side, big fan also if it comes to collectibles, if it comes real estate, big potential. I think if it comes also for mass adoption, right, for individual users. So I know
Sure.
there's so many opportunities. Hard to choose, right?
Collectibles are a big thing, but collectibles, by and large, have big cycles, right? They have big cycles.
Mm,
So,
mm,
30 years ago, 40 years ago, stamps were major collectibles. Today, they're not.
mm, mm,
Right now, again, the stuff behind me is sort of trivial in collectability, but it's cool. But when you get to, I mean, people are fractionalizing Ferraris as a collectible. Um, and when you get to financial instruments, I love the fact that they're being tokenized, but it takes a lot of heavy lifting to create a financial instrument, right? So for a
mm,
family office that wants to, let's say, invest in something in an RWA, as a stable item with relatively reasonable growth, a financial
mm.
instrument is absolutely perfect, a balanced portfolio. But for those that also have an appetite for risk, then collectibles, commodities, some real estate projects. So it is balancing it out. But again, if you find the right RWAs, you're going to find great growth opportunities early on, right?
Mm,
And so that's why I say the commodity sector has not been tokenized yet. Collectibles have been
mm,
tokenized, financial instruments have been tokenized. So going towards the well done commodities related project or
mm,
natural resource based projects, I think those are going to be the hot areas because they have the most to gain.
Mm. No, 100% agree. I think, as you said, there's so much potential, and we're just at the beginning, basically. So already statistics and the current development saying we are already on the higher growth curve. So, excited what's coming in the future, and super nice. I think these were all the questions also from our Q&A session. And also looking at the time, we are actually also coming to the end of our webinar, but thanks for everyone who's really actively listening, participating. We also really encourage you to sign up for our Investor Circle for being up to date for our future initiatives and really what we're gonna do. The topics are based on also the choice of the audience. So we're always planning to bring great guest speakers as well. What we do from now on, since there's a summer break, we will have the sessions be weekly. So stay tuned for the next one, which will be on the 17th of July. And yeah, with that, we thank you all for joining, and yeah, see you soon in the next session, and see you also in the Investor Circle. And thanks again, David, as
Thank
well.
you, Sarah. Be well. Take care, everyone. Bye for now.
Goodbye.